Welcome to the Daily Forkast, July 19th, 2021. I'm Angie Lau, Editor-in-Chief of Forkast.News, covering all things blockchain. Coming up, China releases its E-CNY white paper. Bitcoin mining difficulty falls for a fourth time in a row. And Malaysian police steamroll seized crypto mining rigs. Literally. Let's get you up to speed. From Asia to the world. China has released a white paper on the development of its E-CNY. The paper explains how the People's Bank of China plans to launch its digital currency and how it's progressing, as well as explaining how it will work in parallel with its physical RMB. One key detail here, the PBOC confirms it is developing the smart contract feature of the E-CNY to make it, quote, programmable, more expandable, and better integrated into various scenarios. It also says that while the digital currency is technically ready for cross-border use, internationalization of the RMB is not the goal of the project. Trials designed to test the stability and user-friendliness of the E-CNY have already taken place in 10 cities around the country. The PBOC says that those trials saw nearly 21 million personal wallets opened and transactions worth a total value of around 34.5 billion RMB. Get that, it's about 5.3 billion US dollars that have taken place so far. It gives no date for an official launch as yet, but many experts have predicted that wider operation of the E-CNY will begin in time for the 2022 Beijing Winter Olympics. Meanwhile, Bitcoin mining difficulty has fallen for a fourth consecutive time. According to data from BTC.com, the difficulty level fell almost 5% on Saturday from the previous calculation, and it's now 45% lower than it was when it hit a high for the year on May 13th. That's the longest slide in history. The difficulty level is calculated every 2016 blocks, which works out at roughly once every 2 weeks. It refers to how hard it is for a miner to dig for Bitcoin. That difficulty depends on the global hash rate, which indicates both demand and miners. Now, recent falls have been blamed on the clampdown in China, which has forced many of these miners to move overseas. Despite this, data from the University of Cambridge Center for Alternative Finance says the country still accounts for 46% of Bitcoin's total hash rate. So how is Bitcoin doing today? Well, it's down nearly 0.25% at just over $31,500 US dollars. And that's as of 4 p.m. Hong Kong time at the end of the Asian trading day. And in the top 10 for cryptocurrencies, Dogecoin and Ethereum both down around 3%. In Malaysia, police have destroyed over 1,000 Bitcoin mining rigs seized in raids earlier this year. Video posted by local news outlet Dayak Daily showed how police decided to put on a little bit of a show by using a steamroller to crush the machines. More than 1,000 machines were crushed, reportedly worth 5.3 million Malaysian ringgit, or around 1.3 million US dollars. The raids, which took place between February and April this year, saw up to 8 suspects arrested, 6 of whom were charged with stealing electricity to carry out crypto mining operations. They've now been jailed for 8 months and were fined up to 8,000 Malaysian ringgit, or almost 2,000 US dollars. And finally today, Chinese online shopping giant platform Taobao has included NFT sales in its annual Maker Festival, which celebrates innovation and creativity from Chinese artists and entrepreneurs. Near Protocol, which Alibaba-owned Taobao has partnered with for the sale, says this is the first time the event will be selling NFTs. The works are by Huang Heshan, which creates designs of quirky residential buildings, which are being sold as NFT real estate. The artworks are only available to buy via Taobao using renminbi. Purchasers will then have to register a wallet with the Near Protocol to be able to claim their digital artwork. It's not the first time an Alibaba affiliate has explored selling NFTs. Payment app Alipay sold 32,000 pieces of NFT art in June. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Editor-in-Chief Angie Lau. Until next time.